Hi, this is Roger Conrad. I'm Chief Strategist of Portfolio2020. What I want to talk about today are just some general market comments, and I also want to point your attention to the most recent article that I penned in Portfolio2020, which regards a portfolio update. So looking at the nuts and bolts behind some of these companies with the big ideas that we've been recommending. As far as the general market goes, I think we're entering a period of extreme fear. People say that a bull market needs to climb a wall of worry. There's certainly many things people are worried about today, from the Gulf oil spill to the sovereign debt situation, and particularly regarding some of the European countries like Greece and increasingly Spain and Portugal. Other people are worried about taxes in the United States, greater regulations and so forth. And so you have kind of a perfect storm here occurring at the same time when earnings are coming out that are indicating companies are doing quite well, and that the problems that we've had the last couple of years with the economy are starting to dissipate, and that companies, moreover, are becoming stronger. They're deleveraging, they're investing in the growth areas of their business, so they're better investments than ever. Of course, macro situations can have a tremendous impact on share prices, in particular, of various investments. And we found that out when we started Portfolio2020, which was actually the week after Lehman Brothers went down in September 2008. And what we found was that we were recommending good stocks at good prices, and the prices kept coming down. And people were wondering, these are great stocks, but I don't want to own them because they keep going down. Well, and as it turned out, that was the absolute wrong attitude for anyone to have at that time. We didn't know what was going to happen at the end of 2008, but what we did know is as long as companies stayed strong and as long as they continued to grow and remain healthy, that they would come out of what happened here with the great declines. And that's exactly what happened in 2009 and on into 2010. Now, some of these events are quite catastrophic, quite dangerous, and to me, the most dangerous of all is there's the oil spill, which can do, we really don't know what sort of damage this thing is going to do. We do know this well remains uncapped, and a lot of oil is going into the ocean or the Gulf of Mexico at a very rapid rate. We know that there was a lack of safeguards on this well, and we know that the cost of offshore drilling is going to go up, because there will be more of these safeguards and restrictions and regulations placed on anybody doing offshore drilling. But one thing that we did learn from 2008 again, and the catastrophe there, was that good businesses that hang together in a bad time do come back. And in fact, that's exactly what happened in 2009, 2010. So, and in fact, many of our recommendations are now at much higher highs than they've ever been before. Again, the key was not just blindly buying and holding through a great catastrophe, but buying and knowing what it is that you hold. So hopefully the portfolio article that I've penned here will help increase your awareness and knowledge of our recommendations that I've reported. I'll be doing more of this type of thing going forward in the coming weeks as more of our other holdings in the portfolio report. And again, the common denominator here is, are these businesses holding together? And if they are, we want to continue to hold on to them come what may in this environment, no matter how panicky or fearful many investors may get. So that's all I have to say today. Thanks for tuning in. I look forward to chatting with you next time.